It is a new low today, a new 52-week low. Speaking of stocks that have been in a downtrend, hitting new 52-week lows seemingly every day, if not every other. There it is, down near 14% today, getting back towards $100 a share. So I want to discuss this in this way. Joe has it in the Joe T, as most of you, I think, at this point know, because we discussed it on multiple occasions last week. And therefore, you're limited to what you can really say right now until you go for the rebalance at the end of this month, when you'll be more public with the kinds of moves that you made. So taking all that into context, I'm curious, Josh, of your thought on what's been going on here, if you view it much of the same way you do Apple. I haven't gotten your perspective or point of view on Tesla since this whole thing really accelerated within the last, say, 2 weeks.
So full disclosure, I never made any money in Tesla on the way up. I never owned it. So I was wrong on the stock for 10 years. But the thing that kept me away was my inability to make the leap from it's a car company to it's a technology company. And had I been able to make that leap, I would have made a lot of money in this stock, and a lot of people did. And I just was not one of those people. But that's what kept me out. His personal antics or what, I think he's hilarious. So that's not the reason why I don't like Tesla or whatever. I just couldn't make the leap, because then I look at Ford, I look at GM, you back out the cash. These stocks were trading at 5 times earnings. So, and then look at the Japanese automakers. So I just was never there. Now it looks like the puck is headed toward where I've already been, which is that, oh my God, it turns out they are susceptible to cyclical demand trends within the auto industry. It just took a while for them to get big enough where that would actually matter. That's number one. Number two, I know the bears have been wrong talking about competition on Tesla all these years. I understand that. But now they're right, because when you look at the EV offerings from every major auto manufacturer and some of the upstarts, there's a lot of product coming to market, and it just makes it harder for Tesla to stand out. Even if you believe, which I do, that they have a lead technologically. The third thing is what's going on with his brand. That argument doesn't really move me, that all of a sudden every liberal who wanted an electric car is going to hate him because he RT's DJT. That doesn't move me, but I do think that sentiment weighs on the stock right now. I don't know for how much longer.
Well, I mean, the stock is down significantly since the Twitter deal.
Let me ask you a question. What does Tesla stock do the day he announces a new CEO? What do you think it does? I think it goes up 15%.
It probably goes up. The question,
you want to be short of that day?
Well, the question is, does it stay there? Because last week it had a nice rebound,
Nothing stays anywhere.
Steph, I had one money manager tell me last night that Tesla, quote, remains the biggest opportunity to extract further reduction in excess market cap in public markets, i.e., this stock needs to come down even further. The bubble needs to pop even more than it already has. It's heavily owned. It has a retail component to it. What do you make of that comment?
Well, it's possible, but the stock's already down 80% from its highs, so a lot of bad news is priced in. It's interesting that it now trades at 28 times earnings. That's getting more reasonable. I'm not touching it at 28 times earnings, but this thing used to trade at 100 times earnings. So 28 times is certainly interesting.
It's 21 times. I mean, why is 21? Why is 21 more reasonable? You use your word, more reasonable now. If you say why should they even get that sort of premium now?
Well, I'm saying I wouldn't touch it. I don't know what numbers you're using, but I have 28 times estimates on forward. If it's 21 times, fine. They just put up 40% growth in deliveries for 2022. This company is not shrinking massively. My problem is you are seeing more competition, to Josh's point. You are seeing price cuts. You do have a book to bill that is under 1. It's at 0.65 times. So they're definitely feeling the pressures. And so at 21 times, it's not that compelling. But I'm going to tell you that down 80% from its highs, there's certainly more value here, given the growth that they're putting up. So I'm watching it. I've never owned it. I've missed it all the way up, missed it on the way down, but it's certainly something to contemplate as it continues to just spiral downward.
So, Joe, 40% growth is obviously great growth.